Hello everyone, welcome back to the channel. This is Fair Value Finder, and today we are taking a look at Verisign Inc., ticker VRSN. I came across this when I was looking at stocks owned by Superinvestors, a video that I plan to put out sometime soon. And across the top 5, there were a few companies that were held by a few of them. Most of them were holding well-known stocks like Microsoft and Google. I think 4 of the ones that I had looked at owned each of those. Canadian Pacific was owned by a few, but Verisign was owned by 2 or 3, so it was one I wasn't familiar with and I wanted to take a look. In some ways, I understand. In other ways, I don't. And that's what we're getting into now, because the fundamentals with this one are just really strange. Currently it's trading for $283 and has a fair value of $268. Discounted cash flow is right around $200. And the cash flow is strong, so clearly the growth isn't insane on that. And yeah, I'd agree. Cash flows are growing in line with the revenues of 4 to 5%. And in fact, analysts are projecting revenues to slow down a bit and only grow 3.5% over the next 2 years. So our earnings yield is 3.8%. We'd want $14.14 in EPS for what we're paying. And what we are actually getting for EPS is $8.78 this year, $9.25 next year, according to analysts. So not getting what you're paying on the earnings front. And that shows over here as well. You have a PE of 32, which, I mean, it's okay for more of a growth stock, but the revenues aren't growing at a crazy rate where this would really be a growth stock. Earnings are growing at 5.4%, which gives you a price to earnings growth of 6. So definitely not the best on the earnings front. Doesn't have a dividend. ROE is negative 39.3, but that's only because debt equity is negative. And this debt equity is negative because the common stock equity is negative, meaning they have more liabilities than they have assets, and you're buying ownership in their debt, which is not something that I like. And that's what makes me question why Superinvestors are paying for this stock. But then you see everything else. ROI 44.7. ROA 55.7, cash flows 56, net margins 50, gross margins 87. This is a incredible cash flow and margin machine. They keep the majority of the money that comes in the door, which is not common. Usually I'm looking at a company wanting at least a 10% net margin. This is 5 times that. So on that front, I can see why. Another incredible thing here is the share count. They consistently buy back around 5% of existing shares, which everything else is kind of low. There's not massive revenue growth or cash flow growth. The balance sheet is not headed in the right direction. No dividend for them to raise, but buying back 5%. Number one, it gives more scarcity to the stock. The price goes up. And 2, it gives a boost to everything else. So these are really low numbers, but you end up with market-beating returns by somewhere in the realm of 3 to 5%. Now, buying in at today's price is a little elevated. You really ideally are getting in at a margin of safety. And in the last 52 weeks, it's been 172.5. And maybe that's when the super investors got in, because that would be a really good time to do it. Ideally, you're getting into this around 190, sub 200 range would be the best. And I mean, just look at that market outperformance if this ends up being the thesis that you get. And this is so modest, really, it just hinges on them continuing with share buybacks at the pace that they've shown previously. So we can take a quick look at how things are trending across the board. I mean, financial-wise, things are trending upwards with the gross profit. Similar story with the EBIT, just not as extreme. And the net profit saw a dip in 2022. Honestly, it's pretty flat for that net profit. The balance sheet, I already said, was rough. When we take a look at it, what we see, assets are just dwindling down, and tangible assets are getting worse and worse, just more and more negative. This company is running almost completely off debt, which over time is going to bring down those cash flows and margins unless those investments can get greater returns than they're worth. Which, I mean, with the ROI and the ROA, almost seems like they are. Cash flow's super strong, stagnated a bit from 22 to 23, jumped back up in 24, and we're looking for that pace to continue just in line with the revenue growth. And then everything graphed out price-wise. as I've said, the balance sheet is dragging everything down. I mean, if you completely ignore that, things are looking pretty good for everything else. Cash flows are low, but trending upwards, more towards the $200 level next year. The fair value has been pretty steady. A bit of a dip down in 22, like we saw with a lot of the fundamentals. But right now, it's kind of in between everything, with the share price way out and ahead. So I do think that it is kind of overvalued at the moment. That 172 in the last 52 weeks would have been the perfect time to get in. That would have been when I think a super investor who had this on their radar would have been smart enough to pick up a position. But at the moment, I don't think it's worth it at the moment. I'd want to see this fall back below 250 at least. And I want to read more into it and see what is going on with that balance sheet. Why are they selling off assets and growing their liabilities? I mean, if they're just offloading everything, I want to see if that's going to make them more efficient. And that's really all that I have to say about this one. You know, I like a lot of what I see, but there are a few things that really give me pause and make me think I need to dig into this one. So it's definitely going on the watch list. It has great growth as long as they keep up the share buybacks. But I just love the cash flow, margins, everything else aside from the balance sheet and its current valuation. So I want to thank you guys for watching. Please like, enjoy the video, comment what other stocks we should take a look at, and subscribe so you can stay up to date with everything. And I'll catch you next time.